Silver just did something it hasn't done in over 4 decades, and if you're not paying attention right now, you might miss the biggest wealth transfer opportunity of this generation. 3 major technical indicators just flashed green simultaneously. Silver crossed above $100 per ounce, and institutional money is flooding into this market like we've never seen before. What's happening right now isn't just another commodity rally. This could be the beginning of a historic move that changes everything we thought we knew about precious metals. Stay with me, because by the end of this video, you'll understand exactly why some of the smartest investors in the world are going all in on silver right now, and why this might be your last chance to position yourself before this thing explodes. Let me take you back to 1980 for just a moment. Silver hit its all-time high of $50 per ounce. Adjusted for inflation, that's over $150 in today's money. For over 40 years, silver has been trapped in a range, unable to break free and claim new highs, while gold has repeatedly made new all-time highs. But something fundamental has shifted in the last few months. We're not just seeing a price increase, we're witnessing a complete transformation of the silver market that's being driven by forces much bigger than simple supply and demand. The industrial revolution of the 21st century runs on silver, and we're running out of it faster than most people realize. The 3 silver crosses I'm talking about are technical signals that professional traders and institutional investors watch religiously. The first cross happened when the 50-day moving average crossed above the 200-day moving average, what traders call the golden cross. This is one of the most bullish signals in technical analysis, and when it happens in the silver market, it historically precedes massive rallies. The second cross occurred when silver broke through its decade-long resistance level and held above it for more than 30 consecutive trading days. This isn't just a spike, this is a breakout with conviction. The third and most important cross happened when the relative strength index showed silver entering a new bullish regime, while simultaneously showing that we're not yet in overbought territory, meaning there's still massive room to run higher. Now let's talk about why silver crossed $100 and why this number is so psychologically and technically important. Round numbers in financial markets act as magnets and barriers. For years, $100 seemed like an impossible dream for silver investors. But here's what most people don't understand. The breakout above 100 isn't the story, it's what happens after the breakout that creates generational wealth. When major psychological barriers break in commodity markets, especially after decades of consolidation, the moves that follow are often parabolic. We saw this with gold when it finally broke above $2,000. It didn't just move up slowly, it exploded higher. Silver is now in the exact same position, except the fundamentals supporting silver are actually stronger than what we saw with gold. The supply situation for silver is reaching critical levels that should terrify anyone who understands basic economics. Above ground, silver inventories have been declining for 15 consecutive quarters. COMEX warehouse stocks are at their lowest levels since data collection began. Meanwhile, demand from the solar industry alone has increased by 340% in the last 5 years. Electric vehicles use 3 times more silver than traditional cars, and we're in the middle of a global transition to electric transportation. 5G infrastructure build-out requires exponentially more silver than previous generations of wireless technology. Artificial intelligence data centers consume silver in their cooling systems and circuit boards. The industrial demand for silver isn't coming, it's already here, and it's accelerating faster than new supply can possibly keep up. But industrial demand is only half the story. Investment demand for silver has absolutely exploded in ways we haven't seen since the financial crisis of 2008. Silver ETF holdings have increased by over 2 billion ounces in the last 18 months. Central banks around the world, which traditionally only bought gold, have started adding silver to their reserves for the first time in modern history. Retail investors are buying physical silver coins and bars at a pace that has mints around the world struggling to keep up with orders. The U.S. Mint had to ration. Silver Eagle's The Royal Canadian Mint is running weeks behind on deliveries. And premiums on physical silver have been consistently 20 to 30% above spot price, which tells you the real market price is much higher than what you see quoted. Let me explain something crucial about the gold to silver ratio, because this is where things get really interesting. Throughout history, the gold to silver ratio has averaged around 15 to 1, meaning it took 15 ounces of silver to buy 1 ounce of gold. During the COVID crash in 2020, this ratio spiked to 120 to 1, the highest in recorded history. It was an absolute anomaly that screamed opportunity for anyone paying attention. Today, even with silver at $100, the ratio is still around 25 to 1, with gold trading above 2,500. If silver simply returned to its historical average ratio, we're looking at a move to over $160 per ounce. If it overshoots to the downside, like it often does in bull markets, we could see silver at $200 or higher. The mining situation adds another explosive element to this story. Silver mines are not keeping pace with demand, and here's why that's not going to change anytime soon. 70% of silver comes as a byproduct of mining other metals like copper, lead, and zinc. You can't just open a new silver mine and solve the supply problem. It takes 7 to 10 years to bring a new mine into production, and even then, the ore grades are declining globally. We're having to dig deeper and process more ore to get the same amount of silver. Meanwhile, many existing mines are reaching end of life. The cost of production for silver has increased dramatically due to energy costs, labor costs, and regulatory requirements. We are approaching a point where the marginal cost of production is going to put a floor under silver prices that's much higher than where we've been for the last decade. Now let's address what's happening with currency debasement and why that's rocket fuel for silver prices. Since 2020, global M2 money supply has increased by over 40%. The US alone has added trillions to its money supply through quantitative easing and stimulus programs. Every major economy is running unprecedented fiscal deficits with no end in sight. When you increase the supply of currency by 40%, but the supply of silver is actually declining, basic mathematics tells you the price has to adjust dramatically higher. Silver isn't getting more expensive, your currency is becoming worth less, and silver is simply reflecting that reality. This is exactly what happened in the 1970s when inflation ran rampant and silver went from less than $2 to $50 in just a few years. The institutional involvement in silver right now is unlike anything we've seen in the past. Major hedge funds that historically ignored silver are now taking massive positions. Family offices are allocating percentages of their portfolios to physical silver for the first time. Even some sovereign wealth funds are reportedly building silver positions. When institutions move into a relatively small market like silver, which has a total market cap that's tiny compared to major asset classes, the price impact is enormous. The entire above-ground investment-grade silver market is worth maybe $200 billion. That's less than the market cap of many individual tech companies. When just a small fraction of institutional money flows into this market, it can move the price exponentially. Here's something most people completely miss about this silver rally. The derivatives market for silver is showing signs of massive stress. The paper silver market, where banks and institutions trade contracts representing silver they don't actually own, is enormous compared to the physical market. For years, this paper market has been accused of suppressing silver prices below where physical supply and demand would naturally take them. But something is breaking in the system right now. We're seeing delivery demands on COMEX futures that the exchange is struggling to fulfill. Spreads between paper and physical prices are widening. Banks that have been short silver for years are quietly covering their positions. When this derivatives structure fully breaks, and all signs point to that happening sooner rather than later, we could see a price spike that makes the current move look tiny in comparison. Let me give you some historical context about what happens when silver really runs. In 1979 to 1980, silver went from $9 to $50 in just 8 months, a 450% gain. In 2010 to 2011, silver ran from $18 to $49 in less than a year. Both of these moves happened when conditions were far less favorable than what we're seeing right now. The industrial demand wasn't there, the supply deficit wasn't as severe, and institutional involvement was minimal. We're sitting on a powder keg with multiple fuses lit simultaneously, and most investors are completely oblivious to what's coming. The geopolitical situation is also playing directly into silver's hands. Tensions between major powers are leading countries to diversify away from dollar-denominated assets. Trade wars and sanctions are pushing nations to hold more physical commodities as reserves. The BRICS nations are actively working to create commodity-backed alternatives to the dollar-based financial system, and silver is a key component of those plans. When countries start backing their currencies with baskets of commodities that include silver, the amount of silver that gets taken off the market and locked into reserves will be staggering. So what does all this mean for you right now? If you've been waiting for confirmation that silver is the real deal, you just got it. 3 technical crosses confirmed. A break above $100 sustained, and fundamentals that are stronger than they've been in 50 years. The smart money isn't waiting anymore. They're acting. The question you need to ask yourself is whether you're going to be early to this opportunity or late. History shows that by the time everyone knows about a commodity bull market, most of the gains have already been made. Right now, you're still early, but that window's closing fast. This isn't financial advice. I'm not telling you what to do with your money, but I'm telling you to pay attention to what's happening. Do your own research, understand the fundamentals, look at the technicals, and make your own informed decision. What I can tell you with certainty is that we're witnessing something historic in the silver market right now, and opportunities like this don't come along often. The biggest move in history might not be hyperbole, it might just be the reality we're about to experience. Don't let this moment pass you by.